What is going on, you guys? Welcome to the video. Now, before we get into today's video, I would like to ask for some of your guys' feedback. I'm thinking about potentially rolling out a new series on the channel, somewhat of a weekly market review, just looking back at the previous week, probably on Fridays or Saturdays, just recapping, the major indices, any major, stock movers, looking at things like mergers and acquisitions, just anything notable that you should be aware of as an investor. This is something that I do here at the firm on a weekly basis, and I'm just wondering if this would be valuable to you guys. I don't want to waste my time, so please let me know in the comments below whether that would be something that would be beneficial to you. But today we are going to be going over 3 of the biggest mistakes that beginner investors make. These are mistakes that I've personally made. They aren't necessarily the biggest or most common investment mistakes, but I will share with you guys my experiences and, most importantly, how you can avoid them. So the first mistake that we'll be talking about today involves me buying the company Snapchat. And it's not necessarily the fact that buying Snapchat was a mistake in terms of its performance and how well the stock has done over the past year or so, but it was the reasoning behind why I purchased the stock that was where I messed up. So for those of you guys that follow my channel, you know the type of stocks that I like to invest in. I like to invest in companies that are established and proven, businesses that don't really have a risk of going out of business, companies that I feel 10 years from now will provide me with some steady growth. Now I think back to about a year ago, back in March of 2017, when Snapchat was about to IPO. And I was super excited about this because as a millennial, this was a company or an app that I really liked. I mean, I use Snapchat pretty much on a daily basis, just chatting with friends and sending pictures and whatnot. And I really came to grow a connection, an emotional connection with this IPO. I was extremely excited. I really liked the company. I used the app, so I thought I should buy the stock. Now, that's where the mistake was made. Now, I am an advocate of investing in companies that you like. If you go to McDonald's every day, you really love their Big Macs, go invest in McDonald's. Or if you're a heavy Coke drinker, you like what Coke represents, go invest in the company Coke. I do see merit in investing in companies that you can relate to, but simply liking a company is not a viable reason to invest in that company, whether that's because you work for the company or you have whatever ties you may have. Despite knowing all the red flags surrounding Snapchat, and I think back to the time, I was aware that this company was not profitable. They were having trouble monetizing their audience, a small audience, I may add, right? One of the big dogs on Snapchat was that it's just millennials. There's only one demographic there. The company wasn't even sure if they were classified as a camera company or a social media company. There were just so many red flags, and there wasn't a whole lot that looked promising about the company Snapchat, but I liked it. And it's one thing to go with your gut as an investor, but at the end of the day, if I'm gonna take my hard-earned money and I'm gonna deploy it in the stock market, I wanna invest in companies that are showing signs of growth and prosperity, a company with strong numbers, like a healthy balance sheet, strong management, not just the fact that, hey, I like to use the app. We have to remember that these are businesses that we are investing in. And just because I like to use the app, that doesn't mean that this company is strong from a business standpoint. Now, that being said, who knows what the future will bring for Snapchat? For all we know, it could end up being a great investment. But the point being here was that I invested in the stock for the wrong reason. I invested in the company because I had an emotional connection with the app, not because it looked like a sound investment. And I actually made a pact with my dad that no matter what happens with the share price, whether it shoots up to $500 per share or it drops down to a penny, that I'll hold the stock in my portfolio for the remainder of my investing career as a reminder that liking a company is not a successful investment strategy. Now, the second mistake that we'll be talking about today, and if you've been investing for a while now, you've likely found yourself in this situation before, and that is rushing into a position or rushing to buy a stock. I can think back to multiple occasions, but one time in particular where I saw a stock, it was a gold ETF, and it had a nice pop to start the day. And literally every time I refreshed the page looking at the stock quote, the stock was up another 2% and then another 3%, and it was just climbing and climbing and climbing. And I can remember trying to calculate like how much I could afford with commissions, like how many shares, all really quickly, really frantically. And whenever you have a sense of urgency in the stock market, that's usually not a good thing, because what's driving that urgency, it isn't your logical, rational investment brain thinking. It's your emotions, right? It's either fear or greed that's driving that urgency with the hopes of making a bunch of money or potentially losing a bunch of money. And of course, what ends up happening, for anybody that's been here, I know you can confirm this, is that when you finally do get into that position, the investing universe knows and the stock heads the opposite direction. Like I said, investing in a stock just represents a tiny portion of a company. And when we go to purchase a stock, we should be treating it in the sense that, hey, I'm going to become a part owner of this company. And if I were to ask you, in your local town, if there's a business that's thriving and doing well, and they said, hey, do you want to become a part owner of this business? You'd obviously do your research. You'd look into the company, to the business, and see whether it's worth investing in, but there would be no urgency whatsoever. But when you see a stock quote that's running up so quickly and all you're seeing are these numbers, it's very easy to get lost in the percentages and forget that, hey, there's an underlying business here. So when you're looking for companies to buy, you should be taking your time, doing your research, finding a price that you're willing to pay, and there should be no sense of urgency at all. Now, the third mistake that I've personally made in the stock market, and is one that I think can be very dangerous for a lot of investors, is thinking that you know it all, right? Thinking that you're smarter than the market is a very easy way to find yourself getting burned. And this is something that thankfully I learned very early on. I've had the luxury of working in the investment industry, and I've attended countless seminars and listened and spoken to some very successful money managers, portfolio managers, professionals in the investment space that have been doing this for many years, and they'll be the first ones to tell you that they have no idea what tomorrow will bring. Some of the most highly respected investors in my eyes are the ones that don't even bother to try predicting the market, because the reality is the stock market is as unpredictable as it gets over the short term. We do know that over the long term, we can expect to see growth and steady gains. But for someone to say something like, hey, what's going to happen tomorrow? Or, how do you think the markets will open tomorrow? Or a week from now, or a month from now, even a year from now. To me, that's just one of the silliest things that you can say. There are so many moving parts to the stock market and to investing. I mean, literally every day, billions and billions of decisions and transactions are taking place. And even the smartest person out there doesn't really have much of an edge. In fact, I find it very interesting how the stock market is a place where, even someone with a very high IQ is often worse off. The fact is that a very intelligent person can actually do more harm to themselves or to their portfolios because of their overconfidence in their ability to invest. And this is where you get the very common stereotype that doctors and physicians, they're known to be kind of poor investors because these are people that are typically very smart. They have large chunks of money to invest, and they want to learn and mess around in the stock market. But the market knows better than you do. So rather than trying to play the short-term game and thinking that the ins and outs of the markets or the secret ways to get rich in the stock market, you're seriously sometimes better off just investing some money, putting money away on a monthly basis, closing your eyes and checking back in years later. So guys, those are 3 mistakes that I've personally made in the stock market. Hopefully you can learn from my experiences and try to avoid these mistakes. The reality is that as an investor, you will make mistakes. It's part of the learning process. And in my opinion, some mistakes are meant to be made. Some mistakes you actually want to make so you get a feel for them and so they actually hit home. But ideally you make them towards the beginning of your investing careers, not towards the end when you got a whole bunch of money on the line. If you enjoyed the video, feel free to give it a thumbs up, leave a comment down below. I appreciate all the support. And if you're not already subscribed to my channel, I post a video every Monday. So subscribe and make sure you hit the bell for notifications. And as always, I thank you guys for watching, and I'll see you in the next video.